What is up? Welcome to the Market Debrief and Pre-Brief brought to you by your friends at TradersArmy.com. We are going to go through what happened last week in the market and what are some things that we might expect coming into this week. What are some of the news items that could potentially be market moving indicators and market moving things to consider? So let's go ahead and get rolling. So start off with looking back. And so when we look back at the week that was, we see the S&P was down 0.4%, the Dow Jones down 0.4%, the Nasdaq down 1.1%. Interestingly enough, the Russell was up 0.08, crude oil was up 2.61, and gold was up 0.85%. Now, why were we seeing such an interesting, pullback in some of these major markets? Well, earnings drove much of the news. Earnings drove much of the news this week. When you start, thinking about earnings, Apple and Microsoft and Google, they all came out with earnings. Now, those particular markets make up almost a little bit over 50% of the Nasdaq, and they make up about 22% of the S&P. So really, earnings were a big deal. And companies like Apple and Facebook, they both had, Apple had record-breaking earnings, right, year over year. Record-breaking growth. Well, that's because they were going up against 2020's COVID numbers. And so while Apple did have record-breaking numbers and record-breaking month or quarter, it wasn't necessarily going to be the best of news for Wall Street because they came out with guidance that said, "Hey, listen, we're doing okay, but we could have some economic troubles coming ahead," right? So they gave, both Apple and Facebook, they gave cautious outlooks because of tough year-over-year comparisons. And Amazon, they went and they actually had below the consensus for revenue guidance for next year. And so when you look at what happened with those particular stocks, looking at the charts, and let me just pull the chart up very quickly. So starting with Amazon, we see that Amazon had a really, really big gap down on their earnings announcement, right? So a huge gap down on their earnings announcement, unable to really do anything and come back from there. On the daily chart, that's an interesting, we've got a lower swing high and significantly lower low. I would be interested to see if we do get a rally up in the next few days into this area, which was an old area of demand that could act as a new area of supply for price then to continue to rotate back down, since we're now in a slightly bigger picture downward trend since I've got a lower swing high and a lower swing low. Stock like Apple didn't have quite the negative impact, but certainly also came down a little bit of a double top pattern appears that it may be forming. Facebook on earnings dropped off of what was an all-time high. And so am I ready to write these companies off? Absolutely not. They are still darlings of their industries. And so I'm not ready to write these off, but just be cautious, right? Now, interestingly enough, the only market that was up was the Russell. And when we look at the rut, when I look at the rut on a weekly chart, we can see that we did have a green week. But anybody who knows anything about charting and anybody who knows anything about trading knows that this candlestick that we have there is not necessarily a bullish candlestick, right? It's not necessarily a bullish indication because we were up the prior week as well, but this is a strong reversal pattern, right? This is a spinning top candlestick and a strong reversal pattern. And if you think about the Russell, comparing it to like the S&P or the NASDAQs, the NASDAQ, the S&P, the Dow Jones, they've all essentially gone straight up. The Russell has not. The Russell pretty much stopped going up earlier this year and has chopped sideways. And to me, this is a scary sign, right? The reason these things go sideways is because it's like the canary in the coal mine, and sometimes professionals are looking to bail before the amateurs start selling. And so this is something just to think about and kind of keep in our wheelhouse. As I look at my my different areas of opportunity in these markets, that Russell position is one that if it can poke above this 2400, 2360, 2400 area, you got plenty of room to run. You're at an all-time high. But I think there's a good chance that we're going to see a price rollover and come back down fairly hard. I wouldn't be surprised to see a pretty big pullback into that region. Looking at crude oil and gold as our other kind of major markets, crude oil actually came off of last week's hammer candle. We talked last week about the fact that we had a pretty large hammer candle and that typically signals a bit of a reversal. And we did start to see the beginning of that. We certainly flirted with danger there a little bit as it came just a little bit below the prior week's body's low. So you may or may not have stayed in for the whole week, depending on your particular beliefs and fortitude on how strongly you're feeling. But we talked a lot about this one from a breakout perspective last week, that if it broke out above here, you had plenty of room to run, and that's kind of what it's doing right now. The other one was looking at gold. So looking at gold, we can see on our weekly chart that gold had a pretty lackluster week, right? Not a whole lot happening. This is very sideways, not common for gold, but you do see these long wicks up and long wicks down, like we have over here, like we have some right through here, because when prices are going up, you do have a lot of nervous Nelly brand new buyers stepping in to buy, but they're buying right from the professionals that are selling. And so while price isn't going anywhere, it does tell me that the professionals are probably the ones selling into this little rally on the weekly time period. So let's talk about looking ahead. What are some of our outlooks coming up this week? So what do we got coming up this week? So this week, as I take a look at the markets, I think that we're going to continue our overall bullish pattern in our SPX and Dow Jones. No reason to not consider that we would, continue to go higher and be a bit more bullish. We may get a little pullback, but you've got to prove to me that pullback has some teeth to it before I'm willing to short against the all-time high. So what I would want to do is look to re-engage on a pullback to a better area of demand and a good spot where there are some buyers, a fair price value area, which would probably be right in this region here. That may be a decent time to step in if we open up a little bit low on Monday morning. You might have a good opportunity to get in here on the S&P. If you want to be a bit more conservative, then certainly you can come all the way down to 4240 as a place to re-engage and get back in. So, but my overall thoughts is we continue to stay bullish. We were buoyed a little bit by the Russell, coming up last week, although once again, I don't know that that's truly going to be a sustainable thing. I think we could see the Russell roll over anytime soon, and just be aware of that, right? The Russell is what I like to call the canary in the coal mine. So, well, from an earnings perspective, we're still in the midst of earnings season. So what do we have coming up from an earnings perspective for this coming week? Well, Monday, we have not a whole lot on Monday. HSBC is probably the biggest one that I see traders dealing with. Potentially ANET, I see potentially, a lot of traders are looking at Arista Networks as a tradable opportunity. So just keep an eye on those ones Monday. Tuesday, we add Baba to the list, and Baba is a very highly traded stock. But we also have Eli Lilly as well as Amgen, Sony. You got ConocoPhillips on here. So Tuesday, pretty big day. Wednesday, we had CVS, Booking.com, Uber, GM, Roku, some really, really heavy hitters on Wednesday. Thursday, we come back with Square, Duke Energy Group, Toyota, Regeneron Pharmaceuticals. So a couple of big ones on Thursday. And then Friday, Dominion is really the big one that we have on Friday, with by far the most market cap. But nothing else really up there is anything I'm overly concerned with. So Friday looks to be a pretty dull day from an earnings perspective. So what about our economic reports coming out this week? So we've got our manufacturing numbers coming out on Monday morning at 9 a.m. Non-farm employment change. So that's going to be a big one coming out Wednesday morning. So we do care about the non-farm. Now that's the ADP report. The other non-farm employment change report comes out Friday morning. And this is our unemployment rate. These are probably the most important numbers, especially if you're trading in the currency markets. These will move the currency markets a significant amount. But if you notice, our forecast for the unemployment rates We are previous at 850. We're looking at 895 for non-farm employment change. And then the unemployment rate of 5.9 is it's forecasted to come in at 5.7 and continue to drop a little bit. But once again, Fed Chair Powell said just because we're getting better from an economic standpoint doesn't mean that it's time to ease some of the monetary policies. So if you have any questions on this, the big picture, in the upcoming week, send us an email, support@tradersarmy.com. Until next week, everybody, I will talk to you soon. See ya.